Hello traders, this is Blake Morrow and you are listening to the daily Roundup webinar. I hope everybody's having a great trading session. It's obviously easier for me to think it than say it. For me, it's been a fairly quiet session. I got caught a little upside down when the S&P rallied through the 3,300 level overnight. I had some dollar yen shorts, and I've just been kind of through that, and then got stopped out for break even. And I've been kind of sitting here trying to figure out what I want to do. And the reason why I say that is, and I know it may look like you look at the S&P and you go, well, we're right off of our highs. Can't we just short here? You could, but I have to say that currency pairs like the dollar yen right up against resistance here. We're really knocking our head up against some really key resistance. And my fear is if the dollar yen blasts through the 110 level, which if you follow me via Twitter, you would have seen that longer term chart that I posted, the big triangle formation. If we pop through that 110, then the S&Ps are going to go surging through highs. Obviously, you could trade short with a stop. What I'd rather do personally is wait to see how we close today. Excuse me. If the dollar yen closes back below like this, you can see I have an alarm set there, 109.50 roughly. That'll give me a little bit more confidence that the markets under the equity markets are going to turn lower. So when you have the S&P higher and it's right up against our highs, the Nasdaq's actually bleeding a little bit today. Now the Nasdaq obviously has been on fire, but we're coming off pretty hard today, and I think it's the Nasdaq that if the market's going to be led lower like equities, you got to watch the Nasdaq because it's definitely trading weaker. The flip side to that is with the S&P as strong as it is, the Nasdaq could bounce off of this support and just continue on all-time highs, which we were just trading at yesterday. So that's. I think the market's in a little bit of a, oh, wait, hold on. Can you guys see my screen now? Dang it. Do I have to do this all over again? Thanks, Joe, for the update. All right, so let me go back through what I was talking about. Sorry about that, guys. So what I was saying is I really haven't been doing a whole lot. Just, I want to note the S&P right up here against its highs. Nasdaq's leading the way. Right? And let me go back over to the Nasdaq here. It's leading the way to the downside. So if the S&P, or if the Nasdaq wants to play catch up with the S&P, we can very easily rally right off of these levels. And what I was saying about the dollar yen a little earlier is the dollar yen, which you guys have seen this chart 1,000 times if you guys, follow me intraday. And obviously if you got the Twitter chart, if you follow me via Twitter, the dollar yen, whoops, here, let's go to the daily chart here. The dollar yen is right up against major resistance. Oh, my charts are running so slow right now. Holy cow. All right. We're running right up against major triangle resistance here. I'm going to pull it back a little bit and you'll see the rest of it will populate. But, my fear is if stocks rally to new highs, which the S&P looks dead set on hitting new highs today. It does, doesn't it? If the S&P hits new highs, then what's going to happen with the dollar yen? The dollar yen might actually break through this 109 or 110, excuse me, which I think is really key resistance, moving forward. Now we have stalled at the 78% retracement, and like I said, I'm sideways. I'm sidelined right now because I did get sideways in the dollar yen, even though I just got stopped out for break even. But it's still, it's still like, what do I do here? And when I'm not confident about direction, I mean, risk reward tells me I should be shorting the dollar yen right now. It makes sense from a risk reward perspective, but I look at stocks and I'm like, unless the S&P unless the Nasdaq starts breaking down into new lows and drags the S&P with it, I don't know if I'm going to short the dollar yen yet. So that's kind of like my my thought process. And the dollar yen, like I was pointing out earlier, we got to get back below this 109.50. We're probably a little overbought here intraday, but still, you got to see it roll over before taking action. One other thing I want to bring to your attention regarding today, hold on one second here. One of the other things that I wanted to bring to your attention today, well, actually two things. So the euro dollar, it's back probing pretty key support. This is the big support zone. A lot of traders I talk to are really looking for a breakdown in the euro. I've tried to play it on the long side. I tried to play it on the long side this week, and I lost money. So I'm a little hesitant to be buying the euro dollar at these levels. However, I can't dismiss the fact that we are back about ready to test this big long-term trend line here. It's dotted, right? That comes in right below, like right around 109.80. So I've got some skepticism. We bounced from this 110 level quite a bit. I know we have a head and shoulder pattern. I see it. And until we get above this descending trend line right here, I can't get bullish. I just can't. Above here, that would be a catalyst for me to get long. But that's not going to happen today, and it's probably not going to happen tomorrow. And it's probably, if it's going to happen, it's going to happen following the jobs report. But if you saw the ISM numbers today and the ADP numbers, chances of us having a jobs report that misses is probably not that good. So I doubt we're going to be breaking above this trend line anytime soon. Matter of fact, I think the risk is building that we continue lower here. And that's what's kept my hands off the euro, even though I know we're at a lot of key support. Okay, and that one last thing I want to mention to you guys. We are at pretty elevated levels in equities. Let me put it on the 4-hour chart here. Let me delete this, delete this, delete this. Okay, so if you're looking at the US dollar Mexican peso, we just hit the 161% extension of this October to November, December really move. We hit the 161% extension. I always felt like the dollar Mexican peso had some unfinished business down here around the 1861. We're at 1862 right now, so we're testing it. Now, we also hit the 127% extension of this last move higher. That was coronavirus fear move higher. That came in at 1859. So we have tested that support and we are bouncing. And actually, you can see with the volume bar, there's some decent sized volume coming in behind it, at least with the brokers that FXCM speed covers. I wouldn't get too terribly excited about this, but if for some reason stocks do sell off and the dollar Mexican peso does close the day back above 1865, we might get a bullish move higher. Am I expecting anything exciting? Not really. Maybe a move back towards here, like 1880s, somewhere up in this neighborhood in the next couple of days. But we'd have to see equities really selling off, because that's going to provoke people to sell pesos and buy dollars. It's something to keep an eye on. Right now we are in breakdown territory. We can't dismiss that. So, get back above 1865. We can revisit that. If you guys are in the chat room, you'll probably hear from me if we do. All right, guys and gals. But I got to mention, if you want to see me in the chat room, or if you want to chat with me in the chat room, you can get to it right here in ForexAnalytix, and make sure you're part of the ForexAnalytix community. Try it out, $1 for 10 days. Give it a whirl, and make sure you download the app when you do so. All right, guys, have a great one. I will see you tomorrow morning on the FACE webinar. Thanks, everybody, for tuning in. Have a great one.